It's quite late in the afternoon, and I'm feeling a little bit jaded, I have to say, after a very long but very productive day. So I thought I would slightly change the format a little bit of this session to make it a little bit more interesting. But basically, this is the panel of the brains, I guess. I mean, we've got all the analysts lined up here. We've got three sell-side analysts. I'm looking where you are. Vladimir, Alina, Sergei. Three bank analysts from Nomura, Morgan Stanley and BAML. At the end, we've got Ondrej Schneider from IIF, so representing, I guess, I was going to say, well, institutional more. And we also got Vladyslav Sushko from BIS, Bank for International Settlements, as well, so kind of a European institutional perspective. And then we've got Chris Miller, who we're very pleased is with us also, who is a historian, academic, and also journalist who tweets quite prolifically on the region. So I think we've probably got all bases covered. And as you probably know, I'm Tim Ash. I'm also was an analyst for 20 years doing the job that these three people do, covering Ukraine, etc. But now I'm on the buy side, so now I'm an investor. So to make it slightly different and more slightly interesting, what I thought I would do is ask our three sell-side analysts to pitch to me, which is a little bit strange, but you know, what is the story that you're selling to your institutional investor base about what you should do in Ukraine? You know, what are the pluses, minuses, you know, but ultimately, you know, is it a buy, sell, hold? You know, it's very interesting on the back of the, you know, Ukraine did the 3 billion Eurobond deal. You know, I guess you three all had a view on that. But basically, what is the story that you're selling to people like myself who make big decisions about whether or not we invest in Ukraine? So on that note, let's start with Sergei. First up.
Okay. Can you hear me? Okay. Yes. Tim, thanks very much for the introduction. Well, I mean, it's the continuation of the theme that we had in the previous panel in a larger room, where the glass is half full or half empty. I would say that on the macroeconomic stability, at least in the near term, it's definitely half full in my view. I've had some meetings in Kiev before coming here, and Ukraine seems to be enjoying sort of a nice period when, because global markets are extremely supportive. They had a very successful placement of new securities, extended the curve, dealt with the front concentration of the redemptions at the front, and according to published comments from the minister, are considering doing more going forward. So clearly, there is very strong technical support for Ukrainian assets, especially given that despite sort of the somewhat unexpected details of bad announcements last night, we're still in an environment where sort of any high-yielding emerging market sovereign with a positive credit trajectory is in high demand, and that's exactly what Ukraine is at the moment. But people following Ukraine over time would clearly notice that it is prone to cycles, and political cycles are extremely important because it's a very open place politically. So the window for advancing reforms is not wide. I would say whatever is not done by middle of next year is probably not going to be done through the end of the election cycle at some point in 2019. And again, as we all heard earlier today, there are glaring sort of issues on the structural reform side. Of course, land reform is the most important move going forward in order to improve productivity in a key sector, agriculture. But other reforms, including issues to enhance governance, which is, of course, directly related to the proposed anti-corruption court and other measures. We heard earlier today that the government is advocating, hopefully alongside and not as an alternative, creation of a financial watchdog or some sort of an entity that would look closely into irregularities through financial means. And we have to watch it very closely then, because Ukraine was meant to get a $2 billion tranche before the end of the year. Now we have some concerns about the timing of the tranche, because clearly IMF is having a second thought about the commitments that were made earlier, including on gas tariff adjustment. And frankly speaking, getting a second tranche after that doesn't appear particularly likely. So I would say that Ukraine is still a buy. You have to be selective kind of in terms of assets. You have to look at the curve. Probably if global risk appetite may start waning at some point, then the longer dated securities look a bit more vulnerable to potential correction. Also, if there is more liability management going forward, then I think Ukraine will continue issuing into the long end of the curve. And in terms of warrants, it's a function of many factors. The exchange rate trajectory has changed. The growth figures are not bad, but not sufficient to generate even the sort of valuations that would justify the kind of high 50s sort of prices. Clearly, there should be a much more sustained pickup in growth and based on both reform and macroeconomic stabilization to get into levels that some other people in the industry consider warranted. So it's a buy, but I would say it's a cautious buy. At some point it will become a speculative bet, and I would say closer to end of the year, maybe beginning of the year, when we should expect decisions on what exactly the appeal on the Russian $3 billion bond would come up with. I would probably take some risk off the table.
So it's come a long way in a short period of time. I mean, yields have really collapsed over the last 6 months, but you still see value and a bit of momentum behind it, would you say?
Yes, because it's not easy to find a credit, another credit in the time zone, which still maintains the positive momentum and offers the yields comparative to Ukraine, regardless of the ratings, which still are low. I mean, the CAA rating, from Moody's is a big impediment. I mean, some clients cannot even touch Ukrainian assets if they continue to be rated in CCC category, at least by one agency. So it's important that the government and the central bank continue to work, along the reform and stabilization programs, and of course with the rating agencies, so that the re-rating continues.
Alina, what's your pitch to a bond investor?
Sure. So we've been bullish Ukraine throughout the year, and the performance was great, probably even better than we thought. After just recent amazing performance in the market, we turned neutral. Just because of not because of lack of visibility, but it's just based on the previous performance, and we think at the current, the valuations are good. Maybe not as good as they can be, but now the conviction became lower. I still think that the pension reform will be done. Probably it's more or less consensus. I think there are high chances still for the land reform, but there should be certain preconditions for that. I don't think it's impossible. Let's put it this way. I don't see it tomorrow, but I don't think it's impossible. Beyond the fifth tranche, we might get into delays. Ukraine surprised on the upsides many times, so there is a scope for that always. Like several months before the e-declarations, I could never imagine them. It's a big step forward. Privat, say a year before it happened, even months before it happened, it was very hard to imagine. So there are, you see difficult decisions being taken. But the history teaches us that there is also scope for the downside. So that pinch of skepticism, always keeps investors watching what's happening on the ground. Announcements that the tariffs won't be increased, so on. So it's just, I think we, in two areas we moved to a different sort of different era. Ukraine done stabilization. That's great. Now it has to move to growth. Fixing monetary and fiscal policy, we saw it happening in other countries, say including Russia, right? Both countries moved to inflation targeting, more prudent fiscal policy, and say more Russia, less so Ukraine, stuck at structural, deeper reforms to generate growth. But that said, I'm as an economist, I have two hands on the one hand and on the other hand. So, but at the same time, I don't see reforms being stuck because of the pre-election period. If you think of it, right, what was the most painful things are done? Hryvnia adjustment done. Hike tariffs, like four times hike is already done. Now there are 20% here, there. It's nothing compared to massive hike which was done 2 years ago. What's left to be done? Anti-corruption reform, is it unpopular? Not at all. People are waiting for someone to go to jail. This will you'll be a hero if they see some heads rolling. Privatization, it won't hurt, it will not hurt interests of people. Both these measures are now hurting the interests of business groups, people in power. So that's something that can be popular, but here you need political will. So I do not relate next push on reforms to necessarily election cycle, but we need to see the commitment from the top to deliver further steps required for the IMF to become more positive on the outlook.
Cool. So your market weight.
Yeah.
A market weight. Perfect. Vladimir.
Yes, thank you very much. Yes, just to quickly update our positioning, we are also market weight. We were quite optimistic about Ukraine for quite a long period of time. Market weight now, very comfortable with the credit. It's indeed, as my colleagues have mentioned, it's a high yield bond with improving fundamentals, so it's really hard to ignore. But again, so speaking of pitching Ukraine to investors, right, in a world where countries like Tajikistan, right, borrow 7-8% of GDP in one go at 7% and for 10 years, right? Ukraine, in this kind of world, and after this huge rally which Ukrainian bonds have shown, I guess the main effort of the pitching, target of the pitching effort is answering the question like what to do next, right? And luckily enough, I guess Ukraine has a lot to offer in that positioning, right? Because with this idea of improving fundamentals, it could eventually, with all these reforms and everything, could become like a normal country, right? In this case, the yield should be like in most of other normal countries, and normal means that yields is not 6-7, but more like 3-4-5, right? And that's a quite considerable upside, and that's not something which you can find in many other markets. Actually, there are very, very few other markets who can actually offer such yield, Actually, even if you look at all of those markets, it's really, Ukraine is almost the only one who is offering some kind of consistent reform agenda, which some of it has been implemented and things like that. So that's actually that's its main selling point. So there is improving fundamentals with a strong program for further improvements, which can implement. So in that case, country can change, and that should lead to completely different valuations on the market. That's one thing. And of course, there is usual concern. I mean, it was that it's really hard for anybody, I guess, to look forward without looking into the past. So the history of these reforms, of these improvements in Ukraine, as I guess Tim has correctly mentioned in the previous panel, has been that after these big successes, the government is usually, the political will for reforms, for changes usually fades, and it's really, really hard to to be optimistic on that front. Yeah. And if you might remember, I guess in 2013, situation looked extremely, unfortunately, very similar, right? IMF is in town, the government is pushing this IMF idea, and then, IMF leaves, and then funny enough, or maybe scary enough, we are still talking about the gas tariff indexations, which IMF is insisting and the government is opposing. And for some reason, it's just as if this program, this reform has already been done, and now for some reason we are still discussing it. So this kind of ideas keep haunting, keep coming back, and it's basically very important for Ukraine, basically, to surprise on the upside again. If there will be an additional upside surprise, right? So the reforms will continue. So these tranches will stay. The tranche will be received, maybe additional tranches, as Alina actually quite correctly mentioned. I completely agree with that. Most of these painful reforms have already been done, and the remaining reforms actually could be quite politically attractive for any incumbent politicians, let's put it this way, right? So in that sense, this reform drive can easily continue, so this fundamentals improving story, Ukraine turning like in a quote-unquote normal economy, is still on the table. But and that's basically something what needs to be seen probably in the next almost maybe a few weeks, right? As the IMF tranche will be received.
Okay, so just to be clear, you think the IMF money will come in, let's say, November is realistic, or?
Should be this year.
So you're optimistic this year, right?
Yes.
Okay. Alina, you'd be the same this year?
Yeah, fourth quarter.
Okay. Sergei, you're as optimistic?
No, I
or?
think it will take longer to get everything in place, so we're probably looking at the first quarter of next year.
Okay. I'm just wondering, in a way, Vladimir and also Alina, I mean, if you think the program is going to go back on track, would it not be, an overweight recommendation? I mean, this would suggest more positive momentum coming up in the next
Yes,
couple
indeed,
of months.
and that could be an actually interesting combination, that this reform drive continues, the reforms are changing, moving the needle, as we've been talking about in the last panel. And one important thing is that it is happening in extremely comfortable environment, right, on external level. If countries like Tajikistan are placing, Ukraine can do much better, right, and it's easy for them to do. And unfortunately, it's also very easy to do the reverse, right? And it's also very easy to go backwards, right? You can easily frame some, for example, from the finance minister speech, actually was quite interesting comment about the need to pass through results of the reform to the people, right? So basically increasing the social focus. So what does that mean exactly, right? You can easily put a lot of not so interesting things from the market perspective into this framework, right? So inclusive work, social aspects of reforms and things like that, it could easily frame changes which are not really reforms, or could be even a reverse process in the reform.
And actually, a question for all three. I mean, obviously, the administration has sold the 3 billion bond issue as a indicator of success in terms of reform. I mean, is that fair, or is the balance more towards it's just a very cheap global financing environment? It's more to do with the market than the reform agenda, would you say, or not? Or is it equally balanced, or is it?
I would say it's more of a market, unfortunately, but definitely reforms help. And given the size of the placement, I think that's a large part. The size of the placement is the reforms, but the cost and the duration is probably the market.
Okay, so basically, again, they shouldn't be complacent or overly complacent. And I mean, what message have you got post the new issue?
Well, it appeared to us that after the new issue, the government is now feeling much more comfortable about its funding situation through the rest of the year and even probably into early next year. And they would see this as a step strengthening their hand in negotiations with IFIs about sequence of reforms or specific measures. I mean, IFIs don't necessarily work like this. I mean, again, if a tariff adjustment on an automatic basis was already passed and if, a disbursement was made on the basis of that, IMF cannot come back to this. They can't come back to the board and said, okay, well, we now have to review this because they then have to write, kind of a special notes explaining what happened, which is, not straightforward. So I would say that on the tariff issue, the scope for a compromise is extremely limited. I mean, clearly, whatever has been agreed before as sort of structural benchmarks for the next tranche will be still very much in focus. I mean, and I think that could be some variations of what exactly is the pension sort of reform package that's going to be passed. I mean, presumably, whatever has been submitted to Parliament is going to be passed in unchanged form. If it were to be changes, then maybe the fund will want to see them before kind of becoming more comfortable about this particular structural reform development. But the land reform is politically extremely tricky, and I think this will definitely not happen until the year end, and possibly not even next year until the elections. And the court is, I would say, the most contentious issue of the current kind of reform package, because the government, and you've seen earlier today, clearly senior officials would want to substitute the court with something else, either a chamber or some other agencies which would be kind of seen as less potentially disruptive for the current elite. And I, at the moment, don't see much scope for a compromise either. And IMF is not on its own in this. They clearly have kind of polled some opinions from other institutional lenders and agencies, and they still think that the court is the best way forward. I'm sure it will be very contentious until the last moment.
Yeah. Alina, let's say you're wrong, and Sergei may be correct, and that we don't see the next review completed before the end of this year and it drags into next year. Does the market care? I mean, will there be a market reaction, or in the liquid global environment, is there no penalty for countries that go off track?
Yeah, I think it will be a negative surprise. I think currently people do expect, or at least I think market currently sees higher likelihood of getting the tranche rather than missing it, and I think this is based on pretty high chances of pushing the pension reform, because even without the, say, more like without the other legislation, like this big step would allow, this is a significant step forward, so it's hard for the IMF to ignore it. The next tranche can be less than 2 billion, right? It happened in the past, so to acknowledge some step forward and still to keep the incentives there. But yeah, I think it would be a negative surprise.
Okay, so the 3 analysts are off the hook now. I've got my recommendations, so that's perfect. Ondrej, you're in Washington at the IIF, a very respected institution. You produce great macro forecasts. So, what's the view from Washington? And perhaps it'd be useful just to give, the audience, what's your thinking in terms of the macro outlook? A bit more detail in terms of the figures, perhaps.
When you say Washington, I don't know exactly what part of Washington you mean. We are on east side of the White House, so we look at things a little differently maybe than the IMF. We are a private institution, but we look at the medium-term outlook, and we try to run consistency checks. We look at the country, and we try to put things together and see whether what we hear and what the plans are, whether they are consistent with the medium-term outlook. And in these terms, I think before I jump into it, I would say that the IMF program, usually when you look at the countries, how successful they were during the IMF program, usually those countries that took the IMF program as a minimum and did more than IMF asked for were successful. Those that just filled what the IMF asked them to do, they are usually not that successful. So what I hear here and what makes me a little nervous is that the IMF here is seen as a maximum of possible things. No, it should be the minimum. So look what Latvia did in the IMF program. They overreached and they stabilized and they went through deep crisis to a growth relatively quickly. So IMF should be seen here as a minimum, not as a maximum. That before I go into our own analysis. And when I look at the numbers, there's one problem that I have with the framework of reforms, looking from the macroeconomic point of view. The program is structured in a way that the Ukraine runs the current account deficit, and it went into almost a balance, but quickly went back to deficit at about 4% of GDP, which is about $4 billion on an annual basis. It needs to be financed somehow. So far, it's financed by the debt, but that's not probably something that you would want to do on a longer term. It's not sustainable for a few more years. So you need to replace this with either eliminate the current account deficit, or replace the financing with the equity FDI. Is this happening? So far, not. And I'm worried that the time window for stabilization might be running out. Look at the macroeconomic framework. The inflation now is in low double digits. Maybe it will go to high single digits next year. And at the same time, we have an exchange rate which is more or less stable. Well, not in the last few weeks, but still it's relatively stable. And we have wages that are growing by 30% plus. So when I look at Ukraine from outside, what I see is the relatively fast real appreciation of currency. I see the unit labor costs are increasing tremendously. And I don't see underlying growth in productivity. So that's, if all these things are true, then the logical conclusion is that the productivity and competitiveness of economy is decreasing, which of course is exactly opposite what needs to happen. So, and this might last for this year. Financing is taken care of by IMF and by the issuance of the bond. Next year might be okay as well if the IMF range comes in. And so there's no worry about 2017-18, but this is not the model that would be sustainable for a longer term period of time. So what needs to be changed is probably the growth of productivity and way of financing the current account deficit. And the only way that, from experience of the transition economies in Central Europe, the only sustainable way and sustainable way of doing this is attracting foreign investors, equity and FDI in ideal case. And unless this happens, the macroeconomic stability will be very vulnerable, fragile, and I don't think it can last for longer than one additional year. And when the cracks will be visible, and situation might change. And just imagine what happens when the hryvnia starts depreciating again. That will have consequences for debt, which is foreign exchange denominated to a large extent. And what will happen with inflation? So these things, the macroeconomic stability is not something which is given. It's something that has to be maintained on continuous basis. And as I said, Ukraine has done a tremendous job in the last 3 years. That's to be appreciated. But now it needs to be going further. You know, it's not you never can stop. You have to go further and change the structure. And it has not happened yet. We are not yet in a mode that will be sustainable without further changes. So that's our worry. And as we travel to Ukraine very often, and we always talk to authorities, and we always hear the same stories. We are going to do privatization, land reform, pension reform. That's great, but actually we need these things to be put on the ground and change effects on the ground. Have plans is great, and most of these things that we hear are great, and we all agree that this is needed to be done and has to be needed done. But it's time to really do it and change it on the ground. And That's my opening, and then we will discuss further.
Yeah, perfect. Actually, Vladyslav, so a Ukrainian origin person outside the country working for BIS, I mean, looking back in and coming back over, I mean, how do you view Ukraine and, you know, its challenges and I guess, you know, you've sat through a whole day of the conference like myself. I mean, you know, what's missing, perhaps?
Well, first I'll want to say about maybe what's there. For me, the change has been overall positive, but I've been absent maybe for too long, so I don't see this more like intra-monthly, intra-yearly dynamics of how the reform process is going. And as Tim mentioned, I work for BIS, and it's an organization of central banks, where central banks are our shareholders, and we manage central bank reserves and provide some investment vehicles for them, facilitate foreign exchange interventions. We also host the standard setting committees like the Basel Committee. And I work for Committee on the Global Financial System, but it used to be called the Euro-Dollar Standing Committee. So one of our jobs is to inform the governors about Euro-Dollar offshore lending by banks, what's going on in international bond markets. And in that context, I just wanted to kind of delve a bit more into the positive aspect of this recent bond issuance that Ukrainian government just undertook. So the yield was about 400 basis points, which is the spread relative to Treasury was about 400 basis points, which is like pretty high. But we should also remember that it's very long maturity, and being able to issue a long maturity bond in and of itself, especially less than 2 years after a massive debt restructuring, should be seen as a big achievement. Why is this important? Well, previously, if you look at the BIS statistics, hardly any of Ukraine's outstanding debt was above 3-year maturity. So there was not even a prospect of forming something like a benchmark yield curve in the dollar for foreign institutional investors. Also, long maturity means that Ukrainian government has reduced rollover risk for its financing. This is very important because, as Ondrej has mentioned, financing the current account deficit is extremely important at this point and constitutes a key financial stability risk in the medium term. And Ukraine needs stable, long-term foreign currency inflow beyond what official lenders can provide. And finally, there's been quite a bit said by Sergei and also others about the current extremely accommodative environment globally. And again, here, the maturity of the debt matters a lot. Why? Because the monetary policies of central banks like Federal Reserve, Bank of Japan, ECB, that expanded their balance sheets massively, that keep yields compressed, worked extensively on the long end of the curve. That's where the benefits are highest for borrowers. And Ukraine has now actually managed to reap some of those benefits in the form of this issue. In doing so, as you know, part of the deal was also buying back some of the shortly maturing debt. This time, what did the government do? They bought it at a premium, at higher than the par. However, issuing long-term debt could be quite advantageous for Ukraine's foreign currency inflows and financing, because as central banks unwind their balance sheets and global yields rise, some of this debt could be bought back at a discount. Instead of buying back own debt at a premium, we could buy our debt at a discount and refinance that way. And I think a smart treasurer would take the medium-term outlook for global yields into account, and this bond issue fits into this picture. And finally, of course, this opens an opportunity for Ukrainian corporates to also tap longer-term debt markets and start returning to global debt markets, given that the sovereign is now active at the long end of the curve. What were the positive developments that predicated this debt issuance, made it possible? Well, if you read Moody's commentary to why they upgraded the rating for Ukraine, it was fiscal reforms and external position. So if one thinks about, well, what should we emphasize going forward and where should priorities be, it should be on the type of reforms that go into the same direction to make this market access sustained. So of course, pension reform will further improve Ukraine's fiscal position. I mean, right now, Ukraine's pension deficit is like second highest relative to GDP in Europe. This is unsustainable. And external position. So there, this is much more difficult. Agricultural reform, for example, would be needed because that's a key export sector for Ukraine potentially. Now, I also agree with most of the panelists that even though these reforms so far have enabled Ukraine to tap the global financing once again, the backdrop has been global liquidity and this ease of financing. If you think, what is the other country that has bond spreads of 400 basis points? It's Argentina. What did they do earlier this year? They issued a century bond. So it says much less about Ukraine or Argentina. It says much more about the current accommodative liquidity conditions. So in that sense, it's even more important, I think, to use this global liquidity to Ukraine's advantage and try to maintain and access to the long-term financing now, get foreign currency inflows to finance current account deficits that are expected to persist over the several years, and hopefully also lead the private sector in being able to raise foreign currency funding as well. Let me just stop here and then maybe you can continue.
Perfect. Chris, you've waited a long time. I've kept you hanging. I mean, slightly different perspective. Historian, academic, and kind of journalist. I mean, from a regional perspective, I mean, how are you viewing Ukraine and reforms? And you get around quite a bit, so.
Well, let me try to draw two lessons from the history of Ukraine's neighbors to understand where Ukraine is today. The first will be about where reforms are going and whether they're going. And the second would be why reforms alone aren't enough to get sustained GDP growth at the level that Ukraine's government thinks it can achieve. On the first point about reforms, if you look at the coalition that's backed reforms in Ukraine over the past 3 years since Maidan, there's been a couple of different factors at play. One is you've had a lot of foreign pressure from the IMF, from the European Union, from Ukraine's international partners, which has been very productive in pushing the government in a positive direction. Second, you had pressure from the population to actually make change happen on the ground, especially after Maidan. There was a lot of energy coming from civil society, from the electorate. And third, you've had a great group of technocrats in the government that have been very effective at identifying what needs to be done and more or less pushing through the agenda that they set out to do. And where Ukraine is right now, from what I can tell, is that that coalition is breaking apart. You have international pressure is diminishing for a number of reasons. One is because international partners are less focused on Ukraine. The IMF, as we've already mentioned, is potentially losing leverage because Ukraine can already tap international markets. And so there's less reason to think that international partners will be as active in pressuring Ukraine next year as they were last year. So that node of pressure is going to decrease in importance. Similarly, you're seeing a change in the technocrats who are involved in government. This has already happened to a certain extent, but I think it's an open question whether we're likely to see the same people who have been pushing reforms through thus far sticking around in the 3 to 5 year period. That's a question mark. And so Ukraine's going to have to rely a lot more on the third factor, which is popular pressure to keep reforms going. And if you look at the history of reforms over the past 25 years in Central and Eastern Europe, what you notice is that during periods of crisis, it's possible to rely on technocrats and on foreign pressure to push through reform. But if you're looking at a 5 or a 10 or a 15-year time horizon, you need mechanisms that connect popular discontent with actual changes in the government. And that's where historically Ukraine has failed to translate popular unhappiness to actual change. So the question is, I think right now, are those mechanisms being developed? Is the new civil society activity we've seen over the past couple of years enough to on its own push change forward? And that's where I think the jury is still out. It remains to be seen whether we can have elections that lead to better politicians coming into office, elections that lead to changes actually being implemented the way the populace wants to see changes implemented. And that also impacts the reform agenda too, because it puts a higher priority on making reforms that are understandable and popular with the populace at large. So during a time of crisis, it's easy to tell the population, we need to do tough reforms because it's a crisis. But as the time from the crisis subsides, it becomes harder to sell reform as something painful, and it becomes more important to find ways where reform is seen as a good thing rather than something that's painful but necessary. So that's a really hard change to make, and certain countries have succeeded. Ukraine in the past has struggled, and so I think right now we need to figure out which path is Ukraine on, and can we get those popular mechanisms to actually affect governance on the ground. So that's my first point, is why reform is going to be tougher next year than it was last year. The second point, drawing again from the experience of Ukraine's neighbors, is that reform alone is not enough. It's absolutely crucial, but it's not enough if you want to see the levels of growth that Ukraine's government thinks Ukraine is capable of achieving. In the last panel, we had the finance minister saying he could envision Ukraine at 5, 6, 7% a year GDP growth. I think that's an optimistic assessment, but if you wanted to get higher GDP growth than you are today, one of the things where Ukraine has really stood out in a bad way compared to its neighbors is the scale of FDI, especially in the 1990s and early 2000s, but even since then, all of Ukraine's neighbors to the west have been getting a lot more FDI than Ukraine. And why is that? One is obviously the reform agenda. It's been more successful than many of Ukraine's neighbors, but that's not the only thing. There are two other factors that I'd highlight. One is infrastructure. If you want to attract companies to invest in Ukraine and have Ukraine be part of their supply chains, you need better infrastructure so they can be confident that just-in-time manufacturing, that their infrastructure is going to be effective to fit in their supply chains. And the second thing, which we've talked less about than I think I expected, is politics. Will Ukraine stay politically stable? What will the 2019 elections look like? It's easy to envision scenarios where that causes disruptions not only politically but also economically. And I think that's a bigger question mark than it's been given due thus far today. I don't know what the answer to that question is, but there's no doubt that if 2019 goes in a direction that markets don't expect, that's going to have an effect not only in the short run, but also in the long run, because Ukraine's #1 challenge is to get European investors to see it like more of a normal country, to get to the point where it's seen in the same category as Slovenia or Slovakia. And right now it's not there, and political stability is absolutely crucial to getting it there. So those are kind of the two historical lessons that I would draw out from the history of Ukraine's neighbors and why they've been able to see higher GDP growth over the past 2 decades than Ukraine has.
Cool. Actually, a question for the broader panel. I mean, I guess my concern now when I think of Ukraine and where we are is we're approaching elections. It's just a danger of kind of populism and a pro-growth agenda from Poroshenko in the run-up to those elections. Because you look at the fiscal side, I mean, they've got, I think, 3 billion in the bank, probably more now. They've done the Eurobond, right? So the fiscal position looks pretty strong. I don't necessarily disagree. Well, I don't necessarily agree with you, I should say. I mean, I think in this very forgiving global market, they've got a 2 billion borrowing program for next year. I mean, could they come early? Could they come to market early, get more cash in the bank? And next year, it's all about loosening the fiscal purse strings to basically generate some growth. I mean, why would Poroshenko not do that? It just seems, an obvious thing. Why would he do things that are still? I mean, I forget who mentioned the fact that, actually it was Alina. You mentioned that, the anti-corruption agenda is not unpopular in the country. Well, it's very unpopular in the RADA, right? Because, they all go to jail, or a significant portion, I should say. Not a majority. A lot of people potentially, allegedly, could go to jail, right? So, I mean, it's difficult to get through, right? So why not a burst of populism?
Well, I think we would be idealists if we wouldn't expect populism. I think we should expect populism, and it's just a matter of scale. I think whatever country you look at ahead of elections, there is some increase in spending. Even if you have a fiscal rule in place talking about Russia, right, there are wages increases coming. So, I mean, there will, but at the same time, this year you have a fiscal deficit that is going to be less than expected in the IMF program. So you have some fiscal room to increase spending. The tax administration has been gradually improving. So it just depends how far you go. yeah, I think there will be increase in populism. The ratings are unclear, so at least 40% of population doesn't know who they will vote for. So yeah, we're going into a fierce fight for votes, and we have lots of candidates with almost equal chances. Yeah, that will be a test year on whether you want to position yourself as a reformer. And to me, the prime minister, at least his ambitions looked like that, or you wanna appeal to people who are looking for Soviet type of relationship between the government and the population, where you feed us and we stay quiet and give you our votes. So yeah, but I want to say that if you look at Kiev, civil society, from what I see, there is a demand for reforms. If you're going populist, going off track, the IMF, I don't think this necessarily will be good for you in terms of at least how people look at you in big cities, not say in the rest of Ukraine. Yeah.
Perfect. Actually, Ondrej, this may be a little bit unfair here, but you do sit in Washington. You don't represent the Trump administration in any way, shape, or form. But we talk about external anchors. I mean, when you obviously get around the kind of think tank, sort of academic government kind of circles in DC, right? And is there fatigue? Is there Ukraine fatigue? Is there a willingness to basically adopt a pretty hard, aggressive, stance towards Ukraine and backtracking on reform? I mean, I guess if you go back to previous US ambassadors here, we've had some very vocal ambassadors who've really pushed forward the reform agenda. So, I mean, is DC willing to put its head above the parapet? I mean, is there any leadership actually from DC on Ukraine? That's a fair kind of question, I guess.
So at the end, you got it. It's a deeply unfair question. We have a couple of people devoted almost completely to try to understand what the administration is after. Okay, these people are highly qualified and they know capital, they know the hill, they know how they call it, and they come back once a week, and we have a meeting when we talk about what we have done last week and what we think is happening. And they always come and say, we have no clue actually. The administration has an attention span of goldfish. That's how they describe it. So if something bad happens, maybe, they will be attracted. If there's a good TV opportunity, then they will be attracted. If there's nothing that could be used for domestic purposes, then Ukraine is not on an agenda, which is of course unfortunate, because we haven't mentioned that, but the Ukraine is in a situation which is not comparable to Slovakia and Slovenia, because it's a country in a war, and it's a country with a neighbor that wants it to remain in a bad shape. So that's something completely different from Slovakia and Slovenia, because we are lucky enough that we have a neighbor that wanted us to succeed. Ukraine has a neighbor that wanted to fail. So this is a completely different situation. And I think that the lack of attention from Washington is not helping in this sense.
Cool. Again, I'm asking really unfair questions here, so I'm on a roll, so I may as well carry on. So I'm tempted to ask the question, obviously, Sergei, I think Alina, you were in Moscow recently, right? And Sergei, you've probably been, I think you also mentioned you've been in Moscow recently as well. I mean, okay, and Minsk, but not Moscow, but obviously there are some exercises ongoing, or have been there, but anyway, maybe you got some feedback from there. So, I mean, the Russia view of Ukraine, and I mean, is there any nuances or any, I mean, how is Putin viewing Ukraine now? I mean, it's a hard one to ask, I know, but I mean, Putin's kind of stepped back a bit, he's sort of I guess like everyone, trying to figure out politics in the White House and also politics in Ukraine itself. I mean, do you anticipate Russia will stay on the sidelines for an extended period of time? I mean, that's a fair question, I guess.
Well, let me start. I think Russia, under Putin, managed to achieve most of its near-term objectives in Ukraine with relatively small costs compared to what would require the West to prop Ukraine up. But these costs have not been entirely insignificant. I mean, the eastern regions are in a very tight financial situation, and ultimately it is the Russian government, either via defense ministry budget or some other allocations, that have to make sure people do not starve, and there are some subsidies or some other transfers going through. Because, of course, the government of the rump of Ukraine, the main part of Ukraine, don't really take any responsibility at the moment for paying pensions or any other social allocations to the people in the eastern regions. There's been some intense speculation in recent weeks in local media, mainly in Russia, but I think some Ukrainian outlets have picked up on this story. Mr. Surkov apparently visited the eastern regions, met with the leaders there, and the message coming from these meetings is that, well, first of all, you have to focus on sort of new generation of people, which means that Russia would be open to some personnel changes, which is a step forward, I would say. But more importantly, apparently the message was that these regions should be prepared, not necessarily kind of gearing for, but prepared for an eventual reintegration with the rest of Ukraine, which would be a breakthrough. And because that comes at the same time as Russia's sort of unexpected flexibility on the peacekeepers' role, I mean, the perception is that clearly at the current stage of Russia's political evolution, even an election cycle, they have very important elections in March of next year, Russia wants to focus on key things and sort of probably not waste as much resources as has been the case before, because Russia's growth is still not there where sort of policymakers would want it to see. The real incomes are not growing strongly in inflation adjusted, even inflation sort of coming down rapidly. It's still very shallow growth, and disposable income hasn't really expanded that much. So there are projects locally in Russia that the government would rather allocate its resources towards, rather than sort of funding a project, if you can call it a project, in eastern parts of Ukraine, which is still a neighboring country. Or there's something else going on, which it is very hard to see because criminology is back as a very serious sort of field of science. People look at the headlines and faces and moves, and they have very little understanding what's going on, because the system has come back to Soviet days, and it's the ultimate guessing game. But the most recent signs have been fairly encouraging.
And Alina, what were Russians asking you about Ukraine when you were over there?
This time it was rather me and us asking the speakers, but...
Did Ukraine come up at all in discussion?
It did a lot, yes, it did a lot. I think there is a view that U.S.-Russia relations at their lowest level, maybe not ever, but pretty low. Just recently, the sanctions, new sanctions of U.S. On Russia, basically significantly reducing the chances of sanctions being lifted in the future, removing this power from President Trump, mean that there are much more chances for these relations to deteriorate, and so Russia now takes efforts to at least stabilize them and not to let them go even lower. The very fact of freezing sanctions meant that developments in Ukraine could go either way, because sanctions were initially structured so that you keep Russia on the short leash, and you can increase them or decrease them depending on how situation evolves. Now they're frozen. The the counter-argument was keep sanctions flexible, because then they will have no incentives to improve the situation in Donbass. Now it seems Russia's strategy is, if it's harder now to make friends with US, you try to make friends with Europe, and this unity on sanctions approach has been already broken because, US stepped forward and ramped up them, but it was without coordination with EU. It was for the first time since Ukraine crisis. So yeah, this is attempt to stabilize relations with US, keep things as stable in terms of foreign politics and domestic politics before elections, and trying to build stronger relations with Europe as opposed to US. This issue came up a lot, and but in terms of Ukraine, people see this that. The position of Putin has changed when he allowed or admitted the possibility of the peacekeepers, UN, United Nations personnel on the ground, providing them arms for their defense purposes. And historically, since Soviet times, allowing UN contingent on the ground means you gave up some control. So yeah, that was, the devil is in the details, right? It will matter a lot whether where they are positioned, whether between Ukraine, whether between Donbass, Ukraine territory, or and Russia, or between or on the borderline where the line of fire. But still, this can be a positive development.
Cool. Chris, as the only US citizen on the panel, you're totally responsible for the Trump administration and its view. So, and what's your perspective in terms of Russia, US, Ukraine? I mean, how that fits together or doesn't?
Well, it's interesting on the US side. There's clearly one very important person in the United States who doesn't care about Ukraine, and that's the president. But if you look at everyone below him, there's actually been very little change in US policy. And so the good news from Ukraine's perspective is that the president doesn't care about Ukraine, so he's not interested in Ukraine policy, and he's very disorganized and incompetent in general, which means that all of his people below him are actually running policy. So if you talk to people at the State Department, at the Pentagon, there's been no change whatsoever in US policy towards Ukraine. Now, is that an optimal solution for Ukraine? No. Is it better than people were expecting in January? I think yes. On the question of Russia and Ukraine, I also spend a fair amount of time in Moscow, and from my perspective, the kind of dominant Russian view is that Ukraine is a failed state. The Poroshenko government is not stable. Ukraine has had 2 revolutions, or coups as the Russians would call them, since 1991. And so their view is that there's no reason to expect that the 2019 elections will go off without a hitch. Indeed, they're planning to help that process along by creating difficulties around the election. And their hope is that after 2019, they'll be able to find a party that they can deal with and cut a better deal then after Poroshenko's out of the scene, when they have a more pro-Russian government. So I don't know if it's going to work, but I think that is their strategy, to wait and see. So I wouldn't put much faith at all in the Peacekeeper Initiative, and I don't really actually see it as a concession in any way, because as was mentioned, they haven't said where they're willing to put the peacekeepers, and that's a very important difference. So from my perspective, I think the Kremlin's waiting until 2019. There's not going to be a change from either the EU or the US side, and so that issue is basically on hold until Russia changes its mind about whether Ukraine's actually going to be willing to do a type of deal that it wants over the Donbass or not. That seems to me unlikely.
So the Saakashvili-Poroshenko battle was stage managed for Moscow to imply that the political elite in Ukraine are in total disarray, to keep Russia on the sidelines till 2019. Maybe not, but anyway, something like that. Anyway,
can I jump in on one more thing, Tim?
Yeah, sure.
On the populism question which you raised, I think it's wrong to ask, is there a risk from populism? I think the question is, what type of populism does Ukraine need, and will it get? Because it does seem to me that there's a long history of very effective populism, which is to say mobilizing the population to support better government in Ukraine. You only have to look back to the Maidan to see the legacy of that. The problem is that there's a risk of bad populism as well as good populism. And so I think what I'll be looking for in advance of the next electoral cycle is, what type of populism are we seeing? Is it more handouts to pensioners that are already doing relatively well, certain groups of pensioners, or is it going to be focused on anti-corruption or privatization or other efforts that are popular and are important? So that's the way I would phrase the question.
Can I ask a follow-up to that, Chris?
Yeah, fire away.
Just I'm wondering, as someone who lives in Ukraine and has lived there since 2008, I believe in the emergence of civil society. I think the question is, has there been enough political reform, or do folks on the panel, specifically you, Chris, and Tim, believe that the population has the ability to participate politically without mobilizing itself in the form of mass protests? Essentially, is there a democratic process that can exist without another revolution? Because it's clear that I think the population would like is more anti-corruption measures. How can they achieve that?
The goal that I would say, and this is looking at Eastern Europe's experience, is to move from a situation where everything depends on civil society, so protest movements, civil society groups, to where elections have consequences for reforms. So where you can vote for a political party and know what they stand for in terms of economic policy. That's actually hard to do in Ukraine today. When you get to that point where you have a clear party on the left and a party on the right, and you know what they stand for, that will actually enable citizens to vote for specific policies. And that's somewhere where Ukraine hasn't historically been on economic policy questions. But once you get there, then the population can say, we want X, we want Y, and we know who to vote for in order to get that. So I don't think we're there yet, but that's... I'd like to hope so. I don't know. I don't know.
Actually, the other...
Okay. Maybe just to follow up. I think it's been painfully little in terms of political or electorate reform in recent years, precisely because most of the representatives of the elite are perfectly fine with the current system. I mean, the election system ensures that half of the MPs are elected locally, so they can be easily sort of, influenced to support government if need be, but they also have local agenda, and that means that most of political groups would have a political base in a particular region, and ensures their survival, whatever swings in public mode happen. And as a result of the whole system, the incentives for the elite to see the return of the eastern regions back into the political kind of space of Ukraine, these incentives are very low, if not non-existent. I mean, with the exception of course, the opposition bloc, which would gain a lot of supporters, but otherwise, we have exactly the same very rigid and reform kind of resistant structure of local politics. I mean, the local political space is long divided. I mean, we don't see many political leaders. We don't see any, bright political actors and players in the field. And it's been very frustrating, I would say, for an outside observer to see this. So I'm wondering why, the Western supporters of Ukrainian democracy are focusing just on financial area, or like the big thing like Russia-Ukraine standoff. And not much has been done in sort of trying to incentivize the elite to kind of move on and have a more reform-prone political system.
Alina, do you fancy a career in politics?
I mean, on civil society first, I think it is emerging, and I think the dynamics is obviously positive. I think there is, while it's still hard, there are no lifts like politically, which can bring new political elite to the parliament, but it is obvious that the public opinion now matters much more. Even a simple post on Facebook can stop corruption, or like attempts to get a bribe. There are good examples.
Stop or delay?
No, stop. Attract attention of authorities, police, get it investigated, fire someone. Yes. But no, I agree. That comes together with anti-corruption reforms, right? You have reforms required by the IMF and outside, which step on the toes of the population. But the other major part is on changing the rules of the game, changing the very nature of the system. that's the something which countries have been struggling with, and you know, I'm now mixing, you know, anti-corruption and political reform, but these are all key stakeholders which resist both, and yeah, both in Georgia and Romania, you saw that, you know, this is very painful. Many people have to go to jail to change the nature, so that people, even if they stay, they will change their behavior, because their ups and downs now shift, and they know that there is certain punishment for certain actions. Yeah, I don't know, I probably mixed it coming back to anti-corruption story, but politics, I think, not follows, but goes hand in hand with those issues.
Did you want to comment or not?
Yeah, maybe just to follow up on the previous comments, and maybe come back to the market valuations and all. So basically, I was kind of in the previous panels, a lot of people were saying that there is no other way, right, for Ukraine. There's only reforms, only this ambitious agenda, you know, and all that stuff, IMF and things like that. I kind of tend to disagree, because there is always another way, and if you look at the numbers from just pure kind of a government perspective, I think if you can actually make a conclusion that everything is just fine, right? I mean, there is growth, and given if you like dig into macro and like what the growth drivers are, it does look like that the level of this recovery which is going on, that people are saying that it's very fragile. I don't really think that it is that fragile, because the economy has fallen that much, and there was so much of an adjustment and value-added redistribution to corporates, you know. So, and the economy is so cheap these days, so it's probably can grow. Even if you don't do anything, it will probably grow by like 2-3% a year without doing anything, just on base effect and just on the dynamics of things that have already been done, right? And on dynamics on this impulse from the hryvnia devaluation and things like that. So from that perspective, the economy is growing, unemployment falling, real wage growth in double digits, as we've been mentioning. You know, what's wrong? I mean, everything is fine. And in this kind of conditions, this populism, I think, can have easily be. I mean, you can easily forget about IMF even. And I don't think it will actually be catastrophic in a sense, because with these markets, you can easily keep rolling over the roll over the debt, and the sustainability problem is no longer there, as this 3 billion placement has shown, right? We effectively addressed the problem of 2017-18. And in that sense, Ukraine can easily kick can down the road, as this was saying, and this road can be quite long. Maybe, no, it's not indefinite, right? At some point, we need to get back to reforms, but there are a few years, and it's not maybe more than a few years, right? So you can go back in some reforms on the populist way, and with these drastic changes which this country has done, there is plenty of room to doing this and coming back to some extent, right? And this is probably the other way, and that's why I think, as I said, it's not going to be catastrophic for markets with these markets. So that's why I think you stay on market weight these days with an upside, let's say, option of reforms and Ukraine moving to the normal country category with low single-digit yields.
Thank you. So.
Yeah, I just want to introduce a bit of a disagreement into this mix. So I think I disagree a little bit with Vladimir, and I think there's a bit of an urgency, actually, not to be complacent about the current developments. There was an IMF study looking into what happens with emerging market economies after they restructure their debt, and they just looked at a period from 98 to 2011 or so. And Ukraine right now is exactly the average of what is expected. 3-4% growth, inflation 12%, a bit higher than expected. Fiscal deficit, again, around 3-4%. Accessing markets again after 1 or 2 years, this is the average. So I don't think we're doing so much better than the average. Whereas there's some concern is what happens if these investors who are just now finally starting to look at Ukraine from a positive side and are seeing some narrative that is positive, if they get jittery or if monetary policies tighten abruptly. And there, again, Ukraine's, by the parameters of the deficit, external debt, current account deficit or fiscal deficit, both 3-4%, external debt over 100% of GDP. We are right in the middle of these economies that used to be called like Fragile Five. If you remember the 2013 taper tantrum, where there were some jitters that the Fed would raise rates, and there were massive outflows from emerging markets. India, Indonesia, Brazil, South Africa, and one more. So on these parameters, I think we should seize this opportunity, but not be complacent at all. We're just doing just average, given the support that Ukraine is receiving and competent governance. But I wouldn't celebrate at this point. And for Ukraine to actually catch up with the rest of the European Union in terms of growth, to deal with the non-performing loan issue, the growth rate has to be much higher than 3%. For a country such as Ukraine, it has to be double that rate. So I would agree with Alina there that, for example, now real growth should be a top priority.
Vlady's hovering at the back with a question, so I have to give him one.
Maybe a comment, because I actually agree with Vladimir, what Vladimir said. There is a Ukrainian path, a specific, unique path, Ukraine, which is named Grabli. This is a Ukrainian strategy. Grabli is rake, I think in English. So this is a way where we go already every year, every time after the next IMF program. So we achieve some macro stabilization, we achieve some financial stabilization, and later we think that we don't need IMF already furthermore. And the 2-3% growth could be nice for the government, but unfortunately not so nice for people, because there is not coming convergence with other European countries. We're not saying about China, because in some European countries our peers grow 4% and 4.5%, and therefore if we go to 3% and later being open economy, small open economy, after 6-7 years we have the new crisis, so the people usually have much lower disposal income, revenues, etc., after the next crisis. So Ukrainian path, unique path, is named Grabli. We can go, and I think we will be successful in this strategy. If we want to go a little bit further from this path, we need to look at what IMF is recommending. Thanks.
I don't think that was a question, but anyway, I think...
Comment on this, just to make sure this is not my baseline. I do think that there will be reforms. If I listen to Minister Daniluk, I find it really reassuring that he's reassuring us that this is okay. But I'm just saying that this is an option. I mean, this is not just, it's not a one-way street. It's not that all reforms will happen tomorrow. There are other scenarios, unfortunately, and it's just one of the risks which a lot of people are raising on the market. That's what I'm saying. Thank you.
Alina.
I agree that similar to every person who can choose their way or change their way, like the roads that we choose. Is that the name of the book? I don't know. I know it's in Russian or in Ukrainian, the title. So yeah, Ukraine can change the path, and there is always, even probably 3 years ago, we tend to appear on the same panel, and back then I called it the road of Georgia and the road of Belarus, right? Whatever you choose. So Belarus is stable, and probably that's basically it. Or you can choose, to go through painful reforms, much more volatility and potentially some military conflict, but keep following your dream, a Ukrainian dream, and see where you end up. But I also agree with Vlad, because looking at Ukraine political life, it tends to change the direction very often, and probably it's a problem of politics and politicians, but also the electorate, which very easily attracted or disappointed, and doesn't follow the direction consistently. Now probably coming back to Russia politically becomes less likely, but over the last 20 years Ukraine has changed the direction so much that we can see it going pretty much in any direction.
I was a terrible host and left no time for questions, but if the panel's okay with carrying on a little bit, we could certainly take some more questions. So are there any other questions that are kind of burning in the audience?
Hi, my name is Magnus Sherman. I had a question for the sell-side analysts. When your clients ask about how is the progress on the legal reform going, I understand it's of course a painful and long process. But what are you highlighting in terms of positive highlights that show us that we're getting closer to legal reform? My personal pitch on Ukraine is that lots of reforms has actually been done. Some of them were extremely successful, and I keep when I come back, I keep asking people about what they think about the new police force, and it's part of the legal system, right? So I think the police reform, whichever it happens, I think it is one of the success stories, right? So this is kind of my first initial comment. But I would always say that the legal reform and the court system reform is probably like the core of any structural reforms effort, right? For example, like in the case of Russia, right? People keep talking about the structural reforms which are not happening, but if you look at what Russia actually does on the macro, on the fiscal, monetary, and things like that, you see that it's actually like a major reformer on a structural basis, like fiscal rule, monetary transition, and things like that. It's massive, fundamental structural reforms. But when people are talking about the structural reforms, they usually refer to this rule of law, corruption, and things like that. And of course, this is the most difficult to achieve. And this is, but I mean, if this will be achieved, this is the kind of the game changer, fundamental game changer. Because if you fix that, Ukraine becomes, European Union. Just on the back of it. And that's, of course, the most difficult one, and that's basically a work in progress.
I would say that of all the outstanding issues on the reform front, I think the judiciary reform is the most burning, because smaller businesses do not have a proper recourse in settling, say, commercial disputes with larger corporates or municipalities or the government itself, because the outcome of any litigation is predetermined. And people don't get surprised here about this. And I would say that in Russia, at least the highest courts, the commercial courts, the arbitration, can easily pass a ruling against a government entity. I recall the customs office losing to a private company, which would be hard to imagine in Ukraine happening, because the courts are perceived, or this is reality, are very sensitive to what the higher authority of the government authority wants to do. And a lot of lower level courts are not properly staffed and outright corrupt. So I would say that somehow that reform has not been flagged as a benchmark for pretty much any IMF program. I hope that World Bank or EBRD would take a close look at it going forward. But ultimately it's up to Ukrainians. It's up to Ukrainian government, Ukrainian elites, Ukrainian sort of public to demand that this particular branch of power, the judiciary, is working better. Because this is not going to be a market economy at any point in the future unless there is an improvement in the legal system.
Whenever I talk about reforms, I'm saying you need to understand that following Ukraine, it's similar to driving in the fog. You kind of know you kind of try to guess or like have some feeling what will happen in the next 2-3 months, but you don't know what there will be in 1 year. So we could anticipate, say, pension reform, but we couldn't do it like a year ago. Same was with the e-declaration again, with Privat and so on. Now we have, anti-corruption court outstanding, and the phase in that is pretty low. The expectations that it will be working properly. I'm saying, honestly, legal reform is a genuine test of political system, whether they want to change the country, but it's also a matter of pressure. So in the country which is stable, big, with large reserves, I'm talking about Russia, right? You can gradually grow with your good macro policies without legal reform, like at a slow pace, but it can be enough for people with a certain control over the mass media. In Ukraine, I think it will not work. I think the shock is not reversible. I mean, the war, right? It was a big loss of GDP. We're not going to the pre-crisis levels easily. The population is more democratic. It will require changes, and just without these reforms going forward, the expectations, not met will translate into frustration. So yeah, it will be a test, but it will be also a struggle. So I can't agree more. The push from civil society will be needed. The support, whatever it is from the West, will be required. I don't have a positive outlook on that, but I'm saying that there is a big uncertainty and that there is a chances for it.
Great. Any other questions? Okay. Perfect. So, look, I want to thank the panel. I think you've done a great job. It's been a long haul today, and it's been a late shift. But thank you very much, and thank you for staying around and listening so attentively and asking some interesting questions. Thank you very much.